years ago about this idea of the Bitcoin dollar system and this idea that the US government would sort of use Bitcoin and create the system that's like an analog to the petrodollar system, where because most people, when Bitcoin is purchased, usually it's done with, by buying dollars first in order to purchase Bitcoin, for example. And in that type of situation, you'd be just like in the case of, the petrodollar, where, the price of oil it's priced in dollars. You're generating artificial demand for dollars to buy some sort of energy commodity or energy asset. And Bitcoin sort of is an energy asset at the end of the day.
Switching between digital assets and fiat currencies can be both costly and cumbersome, with cryptocurrencies like Bitcoin being too volatile to serve as reliable stores of value. This is where central bank digital currencies, CBDCs, could offer a solution. In the meantime, stablecoins such as Tether's USDT and Circle's USDC have emerged as the key bridge between the world of traditional finance and digital assets. These stablecoins, pegged to the US dollar, allow investors to seamlessly settle trades without the hassle of constant currency conversions. Building on this, Whitney Webb's discussion with Tom Bilyeu about the Bitcoin dollar system, stablecoins, and tokenization raises concerns about the US government's role, potential hyperinflation, and increased surveillance. She emphasizes the need to carefully assess the implications of these technologies. Meanwhile, Bitcoin's price volatility, climbing from January lows of $40,000 to around $60,000, has sparked speculation on Federal Reserve actions. Economist Peter Schiff also warns of an impending US currency crisis that could lead to economic collapse, rising consumer prices, and higher interest rates. In response, Webb suggests pegging Bitcoin to the US currency, potentially leading to hyperinflation, while stablecoins could be used to absorb government debt. She also highlights real-world asset tokenization as a possible tool to combat inflation. We will now bring you clips from Whitney's interview with the CEO of Impact Theory, Tom Bilyeu. This is an important video you do not want to miss. Please watch, share, and like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy.
But a colleague of mine, Mark Goodwin, put out a book a few years ago about this idea of the Bitcoin dollar system and this idea that the US government would sort of use Bitcoin and create the system that's like an analog to the petrodollar system, where because most people, when Bitcoin is purchased, usually it's done with, by buying dollars first. In order to purchase Bitcoin, for example. In that type of situation, you'd be just like in the case of, the petrodollar, where, the price of oil it's priced in dollars. You're generating artificial demand for dollars to buy some sort of energy commodity or energy asset. And Bitcoin sort of is an energy asset at the end of the day. It's moving, essentially attempting to create the same system, but instead of with oil, with Bitcoin. And most of the Bitcoin holdings in the world are concentrated in the United States, and the US government itself is one of the biggest holders of Bitcoin in the world. So I think there's sort of this effort there to do that. And this was actually implicit in Trump's speech that he gave at the Bitcoin conference a few months ago, sort of saying that's what he sort of saw utility in Bitcoin for, in a sense. And but I think also that has a lot of causes a lot of complications when it relates to the ethos of Bitcoin, which was originally about stopping irresponsible central bank policy and fiscal policy. The idea that you would yoke Bitcoin to the US dollar instead of using it to challenge the US dollar or challenge fiat or challenge debt-based currency or a debt-based monetary system. Obviously, if you join, the US dollar to Bitcoin, having Bitcoin be a challenge to those things essentially kind of has to stop. And really in that situation, you could have Bitcoin enable that type of irresponsible fiscal policy because you could, you would essentially be using it as a sink for hyperinflation at the end of the day. Essentially, if you were to like hyperinflate the dollar in this type of system, obviously the price of Bitcoin would appreciate as price in US dollars, but it's not, but Bitcoin itself isn't subject to inflation. So the people that hold Bitcoin in that case would really benefit in that type of scenario, but people that hold, dollars, for example, would not necessarily. But there's also this effort to sort of resolve this that aspect of it by bringing stable coins into the equation, which are, you know, digital dollars, but they're kind of gobbling up US treasuries, you know, are buying sort of like nation state level amount of US government debt and servicing the debt at the same time. So sort of the Bitcoin dollar system, as I understand it, you would have to have sort of these dollar stable coins in the mix as well, as a way to sort of absorb government debt. And even, you know, these things may not be enough to absorb all of the debt that we have. And so there's these efforts right now, this idea of real world asset tokenization. There's this push into tokenizing what is referred to as natural capital, or aspects, I guess, major, like even entire ecosystems, essentially, and tokenizing them and using that as sort of like, you know, a store of wealth of finite supply. So there's this one effort, for example, that's seeking to tokenize each hectare of the Amazon rainforest. And there's 750 million hectares. So there's a finite supply of this digital asset security that's tied to each hectare of the rainforest. So then you have something else that, you know, could in theory be used as a sink for this stuff too, because when it's of a finite supply, it's you know, it's not subject to inflation, and so you can sort of mitigate the impacts of inflation by having this anti-inflationary thing because of its finite supply as a sink, you know, for the thing that you're creating more of in the case of in the case of dollars.
Whitney Webb is concerned about tokenizing natural assets like the Amazon forest, citing the potential for more surveillance and control. She points out that corporations in this field have ties to government leaders and intelligence organizations, raising concerns about their objectives and potential influence. Whitney Webb also criticizes the behavior of certain stable currency issuers, claiming that their links to strong people and their capacity to freeze assets and shut down wallets limit their potential for constructive change. She claims that this could support rather than challenge existing power systems. Her worries illustrate the importance of carefully considering the implications of tokenization and the presence of powerful actors in this new sector. Let's return to the interview to gain more insight from Whitney Webb.
Do not trust the government not to just keep printing and printing and printing. But what you're saying is, hey, there's this process called tokenization that we can use to assign ownership to every physical thing of value, such as the Amazon rainforest.
But the side part of this is that in order to ensure the integrity of the hectare on which each unit of token is based, you must surveil the forest. And so there's this whole idea of now creating the Internet of Forests, putting sensors on every tree and every hectare of the Amazon in order to ensure that you know, no one's messing with it. And this may also at some point include, you know, the indigenous people that live there, because, you know, if one hectare has an indigenous tribe and less trees, right, as compared to another hectare that isn't inhabited, which one is more valuable in the eyes of investors, particularly if there's this effort to impose like a carbon market, a global carbon market, which some people like Mark Carney and other prominent, you know, central bankers and other bankers have discussed at length as an alleged solution, you know, to environmental issues in the world. You know, I think that is something that should be talked about as well. And also the idea is to also use satellite surveillance. And so this particular effort to tokenize the Amazon specifically is teamed up with a satellite company called Satellogic. And Satellogic, the chair of the board is Steve Mnuchin, the former Treasury Secretary. And also on the board is a man named Howard Lutnick, who was recently named to be co-chair of Trump's transition team. And he's the longtime head of Cantor Fitzgerald, which is one of the main dealers of US Treasuries, and also very intimately connected to the stablecoin Tether, which is also invested in Satellogic. So it'll be interesting to see exactly what goes on there as it relates to the satellite firm, which is also, you know, in previous reporting I did with Mark Goodwin, who I mentioned earlier for Bitcoin Magazine, you know, they've been involved in sort of this effort to create a carbon market in Latin America that was built on the Bitcoin blockchain specifically, which is something that I think a lot of, you know, at least older school Bitcoiners who are not really into the idea of carbon markets or any of these things would be, you know, quite against. But I think it's something that should definitely be talked about, the idea of using satellite surveillance to back all of this stuff up, especially with a company like Satellogic that has the people I mentioned on the board, but also are vying for U.S. intelligence and military contracts, and the people that created that company are longtime contractors for DARPA and the NSA and U.S. intelligence. So you're going to have this satellite firm surveilling large swaths of Latin America. If these efforts, one of which is called Green Plus and the other one called One Amazon, go through, you'll essentially have a company that's tied to, for important people that are, as it relates to the U.S. government, former officials, and also people that have historically been U.S. government and intelligence contractors, surveilling your environment from the sky without a national government really having any say in the matter. Think that's quite problematic. And also Tether is behaving rather, making some interesting choices for a stablecoin issue, where I think as well, they've started investing, for example, in brain-machine interfaces, brain chips and that sort of thing, and have also, onboarded the FBI and Secret Service onto their platform, and have been, shutting down people's wallets on behalf of, the Treasury's OFAC. And entities like that. So, I think, some of these stablecoin issuers, the prominent ones anyway, are sort of anticipating this kind of system, and are sort of embedding themselves with powerful actors that I think ultimately mitigate their ability to be what some people have argued are human rights tools. Some people have said that about stablecoins in the past. But if you're onboarding, one particular government, which very much has a political agenda as it relates to Latin America and other parts of the world, onto your stablecoin, and are freezing, and taking people's money essentially at the behest of that government, and also getting, invested with people that are, at least in the case of a future Trump administration, are likely to have some political connections there as well. I think that's pretty significant.
Meanwhile, Peter Schiff anticipates that the US dollar index will fall below 90 by year-end, challenging the 2020 low, which adds further uncertainty to the economic landscape. This dovetails with the concerns raised by Whitney Webb and Tom Bilyeu about the potential vulnerabilities in the Bitcoin dollar system, stablecoins, and tokenization. Researchers at Bitfinex have noted that September has historically been volatile for Bitcoin, with average returns of 4.78% and peak-to-trough declines of 24.6%. If the Federal Reserve moves forward with its anticipated interest rate cut, Bitcoin could drop below $40,000, reinforcing Schiff's warnings of a potential U.S. currency crisis. The Federal Reserve's dovish tone and the projected rate-cutting cycle, expected to begin in September, could weigh down the U.S. dollar further, mirroring the volatility in Bitcoin prices. This aligns with Webb's concerns about hyperinflation and surveillance, suggesting that the delicate balance between traditional fiat currencies and digital assets might be at a tipping point. As European central banks are also expected to reduce interest rates, this global rate-cutting trend could exacerbate currency instability, increasing the relevance of stablecoins and real-world asset tokenization to combat inflation. With Bitcoin losing momentum and uncertainty surrounding both fiat currencies and digital assets, analysts predict a crucial turning point later in the year, echoing Webb's call for careful scrutiny of emerging technologies. As we conclude, what are your thoughts on the Bitcoin dollar system and tokenization of natural assets? Will they challenge or reinforce existing power structures? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.